Okay, guys, so here are the 6 topics on why we have a bearish bias, aka the market crashing soon. Anyways, the topics are: number 1, pneumonia outbreak in China; 2, bonds onslaught; 3, rising yields; 4, VIX suppression and volatility risk; 5, reverse repo and liquidity concerns; and 6, Moody's credit downgrade warning. Okay, so this is cooked up by Celsius Holdings, and here is what it is. The pneumonia outbreak in China. A surge in respiratory illnesses and pneumonia clusters in northern China raises concerns reminiscent of the early days of the COVID-19 pandemic. WHO seeks details to clarify if a novel pathogen is responsible. What'd you say, babe? Oh, sorry. Oh, back to what I was saying. I'm making a video. Back to what I was saying. To clarify novel pathogen. Okay, adding an element of uncertainty to global markets. Number 2, bonds onslaught. Massive supply of U.S. treasuries with detailed upcoming bond auctions, pointing to a significant increase in government debt. China and Japan's reduced holdings indicate potential sellers rather than buyers, contributing to the growing supply-demand imbalance. So, large supply of news issued U.S. treasuries next week on the 27th. Auctions, 75 billion in 13-week bills, 70 billion in 42-day bills, 58 billion in 26-week bills, 54 billion in U.S. 2-year notes, 55 billion in U.S. 5-year notes, and then the 28 bond auctions, 70 billion in 42-day bills, 44 billion in 52-week bills, 39 billion in U.S. 7-year notes. Going down. So the rising yields, the breakout in the U.S. 10-year yields poses a threat to equities sensitive to rates, especially impacting prominent stocks like the Mag 7. Japan's considerable U.S. debt holdings raise concerns about potential bond dumping and its repercussions on the market. Japan holds 1.1 trillion in U.S. debt. That's a lot. VIX suppression and volatility risk. Manipulation of the VIX recently has artificially propped up markets. This is the lowest we've seen in VIX in years, and concerns about Volmageddon 2.0 loom large. What that is the next volatility event that will happen that is similar to, if not larger than, the events of February 5, 2018. On that day, the VIX spiked 117% and the S&P dropped 4%. 0DTE options are now estimated to make up about 50% of the daily volume of the S&P 500 index options. And this can further support the theory of Volmageddon 2.0 event happening again. Look that up. And then anyways, we got the reverse repo and liquidity concerns. On the 24th, the reverse repo plunged to 865 billion, down 65 billion in one day, in one of the biggest liquidity injections in RRP history. RRP represents available liquidity, money on the sidelines in global financial markets. The Fed utilizes this program to mop up excess liquidity by paying high short-term interest rates to banks and other counterparties. The RRP value has drained very rapidly of late as money flows from this facility into other uses such as treasury issuance, funding records deficits, and ultimately equities, assisting this big move higher in recent weeks. Rapid decline in reverse repo values prompts questions about future treasury funding and equities market support. Speculations about UBS financial stability tied to Archegos and liquidity issues adds an element of uncertainty to the broader financial landscape. Every time the reverse repo gets lower, and the bank has outages that prevents people from withdrawing, depositing, And now there are conspiracies floating around FinTwits that UBS is freezing withdrawals and about to collapse. But hey, yeah, such significant. Some say that this has to do with UBS inheriting Archegos and all the swaps and naked shorts against AMC and GME. Such significant movements in liquidity can cause reactions, and financial markets and participants may adjust their expectations about the company and interest rates. This is in line with the higher for longer narrative. Moody's credit downgrade warning. For that one, we got Moody's negative outlook on the United States government. Ratings citing political polarization raises questions about a future downgrade from AAA to a AA+. So yeah, that's what the boy got. Sheesh.